If you want to know how the market moves a lot of the time, then stick around because today we're going to be going through ICT's power of three concept, the 1, 2, 3 you saw in the thumbnail. We're going to be looking at the theory behind it, followed by some real life examples I'm going to walk you through. So be sure to stick around till the end as there is a bonus section that you do not want to miss. Now, let's dive in. What I want to show you is just that this line right here is the 2 o'clock, 2 a.m. New York time. This right here is a consolidation, basically a sideways movement. And that's exactly what we're looking for at the start of this power of three, which I'll explain just now. So ideally, what we want to see is this consolidation, this tight consolidation in the Asian range. That's what this blue box is, the Asian range. And then this is basically the power of three. It consists of three phases: the accumulation phase, the manipulation phase, and then the distribution phase. So as we saw before, this is the 2 o'clock New York time, basically the London kill zone. And this is where this whole manipulation cycle starts. This was our consolidation from before. Let's get into the first stage, which is the accumulation phase. So during the Asian session, the Asian range, right, accumulating these orders, right, underneath these lows, there's sell stops. There's people's stop losses kept underneath these lows who want to buy and eventually catch, I don't know, the daily high. Their stop losses are all underneath here. So that is the accumulation phase. We're accumulating all these orders right below here. Then when our time comes, the 2 o'clock, the 2 a.m. New York time, that's when the manipulation happens. The market comes down, hence the manipulation. It takes out everyone here, all the people who are long, aiming to go there and take out some previous high. Their stop losses are all the way here. The market takes them out. They're all out of their trades now, and then it goes and proceeds there. Furthermore, people here are also breakout traders. Below here, if they see price go there, they want to sell and put their stop loss above here. So think about it. When price goes underneath here, they're selling. So they'll be selling to go down. Their stop loss is here. The market goes and takes them out. What did the market do first? It took out all the people who were in long early. So it takes out the people who are long early, and then it takes out the breakout traders who were short here when it broke, and takes them out as well. And it's kind of scary how many times this actually happens on an everyday basis. What I like to usually look for is the low, the Asian low. So this whole Asian range, whatever the low is, I like to see that getting taken out. Then this manipulation happens, and that's where I like to buy, and then it goes into distribution phase. And obviously guys, the same can be said for a sell mod. It would just be the same thing. However, the manipulation would be above here, and then eventually the distribution would go down and target whatever sell targets you have. Now that this theory part is out of the way, let's get to the nitty gritty and let's go to the examples. If this video is helping you out so far, then make sure to smash the like button, as this video can reach more traders just like you. Also consider subscribing for more trading content like this. Thanks a lot guys, appreciate it. So this is the first example, and this was taken on the 20th of March, and this is the Asian range as we saw before. Now as you can see, this is that sort of consolidation that we were talking about, where we have orders above here and orders above there. Underneath here is everyone who sells stops, who are thinking the price is going to go up, and their stop losses are kept right above here. I could actually show that by just doing something like that. Their stop losses are all here. So what does the market do? So around 2 a.m, which is there, the times are given there. So 2 a.m, what does the market do? It takes out the Asian low already, but what does it do at 2 a.m? Look at what happens. It goes and manipulates. So this is the accumulation phase. So we can do that here. Then the market goes down, manipulates it, right? Everyone who's short is taking them out, and all these breakout traders, they would have been selling right here. They will be short here. Their stop losses are probably above here and above there, and everyone who wanted to go long, their stop losses above here, sorry, below there. And if they wanted to go long here again, then their stop losses would be below there. 2 a.m, the market goes, manipulates it, takes out all the buyers, early buyers I should say. So this is the manipulation cycle, and then throughout the day it distributes and goes higher. So think about it. It takes out all the people who were breakout traders here, wanted to sell when it broke the low. It took all of them out right there. All of their stop losses are taken out. Then all the early buyers who wanted to buy, their stop losses were here and there, as I mentioned before. Even they've been taken out with this move here and this move there. Then the market goes and has enough fuel after collecting all the money from their stop losses to go and shoot to the upside. Example 2. This was on 21st of March. So as you can see, this is that Asian range again, the consolidation. I'll just move this here. And the 2 a.m. is around there. This is the 2 a.m. mark, okay? So at this time, the Asian low, which is there, and the Asian high. The Asian low isn't taken right now, so I'm not even looking for anything. But check this out. So we already know that this is the accumulation. So if we want a market to go higher and we have a bias that prices should be going higher and targeting maybe this, then what I want to see ideally is the manipulation first. So at 2 a.m, what do? We run down, take out all the people whose stop losses are here, the sell side liquidity, as ICT says. So there's the manipulation, and the rest of the day, what does it do? The distribution cycle. Everyone who was early sellers or breakout traders, their stop loss is above here and above there. Market takes that out very ideally. Then early buyers who were buying here throughout the Asian session wanted to eventually price to go there, but they were early. What does the market do? Takes all of them out, and if you were buying here, takes them out as well, and then goes and distributes. You can see the market is actually so manipulated, and it's actually crazy. Now for the bonus tip, which all of you guys have been waiting for, and if you've stayed this long, thank you guys so much for watching. The bonus tip is, usually when we see this accumulation, manipulation, distribution, the power of 3, whatever side it manipulates first, you can reasonably expect the previous daily high to get taken out. So in this case, the previous daily high was right there, this thing. So if I get a line tool and just mark it there, and I'll make this red so you guys can see. So as you can see here, accumulation, manipulation, where's the target, distribution, previous daily high, can reasonably be expected to get taken out. That's the end of the video. I hope you guys enjoyed. Make sure to check out this video as well. Talk about ICT kill zone, especially the London kill zone, which is a pocket of time where optimal trades form. I will see you guys in the next one. Happy trading.